You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome to This Week in Futures Options. Well, that was my best Mark Longo imitation, and unfortunately it wasn't very good. We got Mark out with a little bit of the flu this week, so it's going to be just Nick talking here and Uncle Mike on the other line today as we go through sort of a uncharted territory without our special host, Mark Longo. So do the best you can to hang on, and maybe you'll vote to kick Mark off every week. That's my hope anyway, and then we'll push the show forward without him. So we'll see how it goes today. So probably a little bit more unstructured because he's pretty good at keeping us going along the outline, whereas I probably won't be as measured along those lines. So we're just going to run through, and I'll tell you right off the bat what we're going to try to cover. We're going to look at some oil today. We'll look at the crude oil. We'll look at gold, both and silver, and we'll do our movers and shakers for the week, and probably end it with quite a bit of talk about Bitcoin, which we saw the release of this week, and which we're going to see the release of this weekend over at the CME. So we might as well get started. On the other line, as in the hot seat today, and taking buckets and throwing him over the side of the boat as I sink the ship. We got Mike Dussault. How's it going, man? You want to welcome yourself here today?
Pretty good. I like the analogy. I can be the bailer. That's a good thing. And then in terms of with Longo, let's start a good nasty rumor about him. The other day, Mark Longo, he bought an option, an at the money call option, and on the same in the same month, he bought an out of the money call option on the same underlying. Mark Longo bought a stupid the other day. There, I'm going to spread a nasty rumor about him that he'll hate.
Good God. And all we need to make that worse is if you did it a third time, right? We still call that a stupid. We don't even call that, a double stupid, but that's surprising. And I believe it. He talks bad about it when we are discussing it, but I could see him doing it, especially if it's something he likes. But anyway, it's good to have you, and thanks. Appreciate you helping us out today. It's kind of strange because you hear yourself talking and you expect, you sort of know that he's monitoring in the background. But now that I know he's not monitoring, I'll just have to treat it like I'm doing a webinar. So hopefully we'll get to the point where I feel a little bit more comfortable, and gradually we'll start to get there. Anyway, let's just sort of look. I don't know about you, Mike. It seemed like a pretty kind of meh week in terms of just movement across the board. If we start out with our crude oil, there was news over the last couple of weeks and nothing really moved the market. So when we go out here and look, and again, as we mention all the time, cmegroup.com/TWIFO, the reports are live right now. So anything that you hear us talking about, you'll be able to click on the same links as us. So go out there if you can, if you're listening live, and if you are listening after the fact, you could go out there and see the report. You'll have to look at this week if you look at it today or tomorrow, meaning Friday or Saturday, or you have to look at last week if you start looking at the report while you're listening to the show as well. So we'll just jump right in. And, we had January expire yesterday and the contracts for the crude oil. But all in all, Mike, I don't know about you, kind of not much of a week in terms of movement in that underlying, or a lot of activity from an open interest and trade standpoint, but not a lot going on in terms of, the market moving itself.
No, I would agree with you for sure. It seems to me that just in looking at a chart of crude about a month ago, we got to the 59 level and we couldn't quite, I think it was late November, we got to the 59 level in crude for the light sweet crude. We couldn't quite cross the 60 mark. And I guess if you're an oil bull, the good part about that would be the fact that we're just kind of staying there for the time being. It really has kind of been pretty much a channel between in the upper 50s. See, it's gone to the support level around the 56, but just still has not been able to cross the 60 mark in terms of the light sweet crude. The couple things that do surprise me out of this, the fact that we have some just over the course of the last few weeks, some world events. First one is the fact that we now have Jerusalem is going to the news that Jerusalem is going to be the new capital of Israel, or it's going to be recognized as the capital of Israel by the United States. Just with all the threats of terrorism and things like that, it did kind of surprise me a little bit that we didn't get a little bit more of a bump up in oil from that, and along with the fact that it just seems that we have a lot of macro world news that's happening right now, just not necessarily this past week per se, but just over the last few months. I talk about this on the option block a lot. A joke that I used to tell to my clients, or not a joke, but I was very serious about it, was if I'd get a new client and they'd send in their money, and then once the money went through the transfer process and the money would be in the account, I would tell them, okay, everything's all set. Tomorrow I'll put your money to work, unless, of course, we have like a threat of a nuclear war or something like that tonight, and then I won't do it. But we have threats of nuclear war. We have threats of a lot of things that are happening throughout the world. We have a totally new tax plan that's going to come into play. We're getting rid of the individual mandate on Obamacare. We have a lot of things going on, and not only just in the crude oil space, but just with silver and gold in general. It's going to take a lot to move any market, it seems.
Yeah, I would tend to agree with that, just from the standpoint of it's very reactionary, right? I think the last time we saw a significant break in the S&Ps, we saw a rush. We saw gold get pumped pretty good, but then it sort of tapers off. So it's like everybody, it's almost like people's digestion of the news cycle is very much well, for lack of a better term, it's like Twitter, right? You see it, you get hyped up, you might react, and then as the next line of news comes out, of the next less noteworthy thing, you just sort of go back into your regular kind of pattern of things. So it just seems like it's and even to some of the things that that our president has said, and the reactions to those things, and the other news, we're just sort of chewing it up, reacting a little bit, and then kind of going back in the status quo. And I think that is a little bit disturbing, right? Because it doesn't seem like everybody's taking things into account. And you mentioned the tax plan. I mean, that there's been some good articles out there that talked about who it's going to affect and who it's going to benefit. And I think if people really start to go even looking at that thing, there might be a bigger reaction in the market when they start to see how little of the people it's supposed to help it's really helping. So CNN's got a really good tax calculator on there where you can, put your revenue and what state you're in, and it'll tell you sort of your benefits over the year. So I think people should go look at that. And I think that, we have to be maybe less immune to the shocking news than we are, and start really trying to put all the pieces together, because you're exactly right. We have all this big news going on, but it just seems like it's, you take the gut punch and you sort of weather that, and then the next thing you know, you move on to the next thing. It's our attention span may not be where it should be in terms of this, economic climate, political climate, all those kind of things. Anyway, so just jumping over to crude, we have a pretty flat week, right? We bounced around a little bit. It didn't do much in terms of the futures price, and with that, we saw the front month volatility get hammered pretty good. So we're down trading front month February contract is trading 17 and a quarter, down 2.5 vol. March down to almost 19 vol. So across the board. So that front month is really the term structure really got steep this week with. Again, another week of no movement, and I would agree with what you said in terms of, and you're going to know better than me in terms of the ranges and the setup for where the underlying should go. But when we can't hit these significant numbers, right? We're just sort of, I think we've moved our trend lines in between the 55 and the 60. So until we do anything on either side of that, I think we're in for this, sort of the same thing here. We're going to grind through and have volatility get softer. Our front contract right now, if we don't take the weeklies into account, has 33 days and it's trading 17 and a quarter vol. So we're talking, a fairly low volatility in a contract that's got, it's going to take us through the new year. So that in and of itself is significant. If we go back and, I'm going to work my way across the TWIFO report and look at the futures price, we'll look at the at-the-money volatility. Now, if we look at the QuikSkew or the risk reversal, again, puts, not much change in the week. I think calls got a little less cheap, but if we look at the QuikSkew historically from the 30-day contract, since that relates best to the 33 days that we have in the February, all in all, we're right about the average of where the puts and the calls have been trading. So, we're sort of moving in, even long term, we're sort of moving into sort of an average range in terms of the expectation of what the vol curve looks like. So not a big significant change there. Like I said, puts a little bit more, a little less firm than they have been, but not a significant change. And the call's a little less cheap. So maybe a little bit of a help in terms of making the calls come back in line with the puts, but not anything significantly different than it was. About maybe a vol percent is all. And then as far as the trade goes, increased open interest almost 9%. We saw January go off the board yesterday, so February got a big bump, 18.5% increase in open interest, and pretty good volume numbers this week, almost over 500,000 contracts, at least in the when we generally speaking right now, we're looking at the front year of expiration. So most of that volume coming in the first calendar year for the crude options. And then movers and shakers this week, again, as you mentioned, we're in this range. We can't really jump past the 60 right now, but if we look out on the term structure, we see a lot of 70 calls trading. So I can look just as the most active volumes for this week on the This Week in Futures Options report. We see a 65 strike in March having the most volume, the 70 strike in April, the 70 strike in May, the 75 strike in June with 10,000 out there, the 70 strike in July. And then we jump out to the next October had a 75 strike, November had a 75 strike, and the December had a 75 strike. So Mike, what do you think about that? We saw a lot of upside purchasing in the crude. So are we finally getting people? Are people saying I'm selling those to finance something a little closer, or do you think that people are starting to look, well, I'm going to take my chance and see where things go, relating back to what you said about some of the uncertainty that's going on in the market with some of the political stuff?
I would say, logically speaking, I mean, my personal opinion on crude oil, I don't really see it going up to the 75 level in the timeframes with which you mentioned. Typically, I'm more of an S&P guy, but just in following crude like I do, I don't know if we're going to get that kind of movement in that time frame. So I would like to, if it were me, I would probably be more along the lines of selling those calls to finance something else, whether I'm looking to finance another call spread and a ratio of some sort, or financing a hedge or something along those lines. That would probably be more of what I would be doing. But if we do have the optimism in crude that people are thinking maybe somewhere down the line we could get something to happen, it would not surprise me. But I would say, the more logically speaking, it would probably be more of a financing play, because that's close to a 20% move in crude oil in that time frame. And so I would be more apt to believe that that's more of a financing play, to say the least.
Yeah, and if you click on the links in the most active columns, you can see that several of the months have openings in there. So if we see some of those 5,000s, maybe a strip, or maybe it's some sort of like a calendar condor or something like that traded. But I would tend to agree with that. I don't like. There are a lot better plays, especially when you're looking at how low the volatility is, right? You can really get some calls that are very close to the money right now, almost for zero, right? Or for a credit with a simple 1x2. If you look at the 60 and you go up a little bit higher, you have a lot of room on the upside for a move, and before you get in trouble, and you're paying nothing. So I would tend to think that that's probably what's going on. And again, I didn't pay too much attention to the crude to see how this week, in terms of the block, to see if those things traded on the block, or if they were on Globex themselves. But always, the one thing we look at week after week is, sort of the higher strikes that are trading, and especially the higher strikes that are trading out on the calendar. So this is probably, if I'm not mistaken, this is probably the most months that we've seen something, like you mentioned, almost 20% out trade so consistently across the whole term structure. So that's something we'll have to watch, and I'll have to go back and take a look, so I'm a little bit better informed next week when we do a recap of what we saw today. So let's go from the black gold over to our precious metal, our regular gold, and give that a little look. And this is probably, for somebody who was a rates trader and didn't have much experience when it came to the commodity market. This has become. I like WTI now, Mike, but I really like gold now, and I don't know if it's because it's something tangible and physical that you can get in your hands, and it's it's a store of value and all that kind of thing. But I've enjoyed following it, and I like watching it quite a bit. And I think we're in some really oddball territory just from a guy who's traded options, and just from watching this market over as long as we've been doing this show. Let's just jump right in and say we'll tend to look at stuff if there's less than a couple of weeks in an expiration. I tend to say, okay, we're not going to talk too much about that one. But I think what's significant here is we have 11-day option in the January contract, Mike. And you know how it goes. As you get closer to expiration, you tend to see the volatility sort of kick up, right? Because the decay kicks in, and people want to keep that price around the same level, so they push the volatility up. But what we see today, or this week, we see the January contract. It's in almost it's over 1 3/4 volatility. So the front contract is trading 7%. Okay, and we have a little bit of a retracement down from our near term, our near term lows in gold around about the 1248, 1245, something like that, from where we touched. I think that might have been where we touched, up to about the 1258.5. But to come in 1 3/4 on a front contract that's going to lose 2 days over the weekend, right? Typically, you'd see a little bit of a boost potentially. So if we see this, I mean, you're basically saying, I don't think anything's going to go on in this front contract for the next 10 days, which encompasses all of next week and then part of the following week, or I think we'll even get through Christmas on this one. Yeah, 12/26, you get the day after Christmas. So have you seen that before? What do you think of seeing something so depressed like that with I get it, it's under 14 days, but you know what I mean? You typically see that term structure get pulled up. What are your thoughts there?
Well, I think this just seems to be across the board, even on the equity side of things, as well, is that if the world events that we've had don't make this move, then I don't know what will. The only other theory that I have on this, and this is something we were talking about on the option block yesterday, is that this other thing that came out, I forget what it's called. I know we're going to talk about today, the Bitcoin. Oh, yeah,
Yeah.
Bitcoin.
Yeah, Bitcoin, right, yeah.
For years and years and years, I have exposure to precious metals for my clients. And I'm one of the few financial advisors who really believes in that, not for a huge section of their portfolio, but definitely I think you need to have exposure, not necessarily for everybody, but for a lot of people. And then one thing that I've noticed and I do hedge them with collars, and I talk about that in the option block frequently, but one thing that I was just noticing the other day is that when we hit the peak of gold and silver, or at least the peak for my time in the business anyway, and for a lot of people's time in the business, in April of 2011, shortly thereafter, and I remember when silver was up in the 40s, and I believe the Merck actually had to raise the margin requirement on it, rightfully so, just because the contract just got so much bigger overnight. When that happened, that was around the time, and I was just kind of doing some looking at this, and we can talk about this when we talk about Bitcoin in a little bit. That was when Bitcoin was just starting out. And so just a theory that we had a conversation on this yesterday was that could Bitcoin, the people that were believing in the zombie apocalypse, so to speak, the gold and silver zealots that believe that that's the only thing that's going to be worth anything someday, could they have switched from gold and silver to Bitcoin? That's one theory. Now, with gold having such low vol like that, you could argue and make the case that maybe it actually deserves to have such low vol, just because of the fact that the movement that is in it recently really is not that much. But with the number that you're saying and you're quoting, that almost seems to be a little bit low even for what's happening. So with that being said, I guess the long and short of it is that is a very unique number. And I guess traders aren't expecting too much to be happening in the next few days.
Yeah, and Mark and I, when you've been on the show, you've heard us talk about this. People always talk about low vol environment. They can't trade a low vol environment, and there's not much to trade because people tend to think of volatility, and more so, at least from my background, people always wanted to sell volatility, right, to get some premium or at least have a chance to. You weren't going out there looking to buy a high volatility. You're always looking to sort of sell a high volatility. But I looked at the ranges that these volatility levels should encompass, and we are trading those ranges, right? So it feels like you should be able to, get some of your money back on the gamma. And I'm always pushing in low vol environment. I'm always pushing these hedged gamma trades because I think you don't need much movement in order to get some of your premium back. So, but it's interesting to think that we would be making a shift in store of value from gold to something that I don't think a lot of people understand, but we'll get to that when we do finally breach the Bitcoin topic. But if we just go through and start looking at our gold TWIFO report here, we're going to see red across the board on the volatilities, and even our 40-day contract is almost 8.5%. Our 90 or our 70-day contract is 9.25%, and our 100-day contract is under 10%. So we're seeing a significant part all the way out to, all the way out through December is under 12%. So we are on lows, and I agree, right? Vol is low. People always say, vol can't go much lower. Well, it can always go lower if we're not doing much, or if we're trending, or if there's, like you said, news is being absorbed and not really changing the vol perspective, then we can continue to see it. But I got to tell you, at 7%, you just got to think at some point, what I start to do here is start to look at where we are in the range and start to decide what I can do that's going to take advantage of this range at this low volatility. So it'll be interesting. Again, always a lot of good stuff to watch. and it may not make people happy that volatility is so low, but when it does change, it's going to change rather quickly, and that part is going to, for me, that's always fun to see how people react and for how long that spike is going to occur. So you got to believe it's coming at some point. But if we go out here and look, we again work our way across the TWIFO report. Not much of a change in skew, but one thing that's sort of significant, if you go down and look, you're seeing the puts are really flat to the at the money. So that's our QuikSkew number. So we see a lot of zeros or close to zeros. So just a little bit expensive or a little bit cheap, but generally speaking around. So we're talking about from the 50 delta to the 25 delta. We're seeing those put spreads trade about equal levels from a volatility standpoint. So, there's a lot of opportunity there just when you see sort of flatness between the wings and the at the money. So there are some, for me, at least from in my history, there's some tradability there in terms of spreads and hedge spreads and different kind of things like that. And the calls, we saw over the course of the week, we saw them get much less expensive to the at the money. So across the board, we saw the volatility come in. So that partially is the fact that we moved back toward our upper part or the middle part of our trading range. So we have a very kind of a big belly in this vol curve. So not too expensive, not expensive at all on the put side, and then not too expensive on the call side. And the reality is when you're talking at such a low volatility and you're talking a percent rich or cheap, it's really almost no difference at all from a vol standpoint. But with all that said and done, open interest again up 6%. So we're almost have 1 million contracts in open interest in the gold. So this low vol tight range isn't really affecting us from an open interest standpoint or a trade interest. So what do you think is happening there, Mike, with the trade still and the open interest still being supported?
Well, I think that it's the fact that even the buyers and the sellers are there. I mean, it's hard to say with that. I mean, I think it's just a very surprising scenario, to say the least. But I guess not necessarily the option side being so surprising, but just I'm looking at a 1-year chart of the gold futures, and there's really not a lot of movement on it. So I mean, what is this telling us? It's hard to say, but I think, just like to allude to what you had said, we're waiting for something to happen, but it just needs to happen.
Right, and that's and that's really the obvious question at this point, right? It's like, what's going to happen, or what can you do in the meantime, right? So people obviously aren't sitting on the sidelines, and again, we'll address what's trading and that type of thing. But it's what you can do in the meantime. And for me, when you're rangy, I think there's there's short trades you can do. Even if vol is low, you can pick some wide strikes and sell some premium as a strangle, or you can start trying to buy, look at vol and forget about it as vol and think about it as gamma. So it's one of, and what I've been pushing, Mike, I don't know if you've listened to some of the shows or even the shows you've been on in this range. I like hedge stuff. I like buying puts and buying futures down on the bottom side, and like buying calls and selling futures up on the top. So it's like a collar, or no, it's basically it's a what do I call it? It's a split strangle almost. It's you're buying both and you're hedging both separately. So I think that there's opportunity there without a lot of movement, and I still continue to think that, especially as we move down into these vol levels. As far as our trade this week, not anything really tremendously outside of our trade range. We see some 1750s and some 1600s, but the volume is so insignificant that they doesn't even bother mentioning them. But a lot of our trade is in this range, our 1200 to 1300 range, and I think that's what we're going to see, and maybe we're seeing increases. So people are obviously opening positions, but we're seeing all these strikes within this 1200 to 1300 range. That's where a lot of our activity is happening. So again, vol's low. You got to keep an eye on it. I don't think, even though it's low, Mike, I don't think you can ignore it. I don't think, well, it's not going anywhere. I think when people get most content with volatility being either high or low, that's when the change occurs, right? So when we have this, and I'll try to tweet out as I can a historical 30-day constant maturity volatility, but when we're this low, I just got to think that something's on the horizon. And when you're this cheap, you feel like you got to do something. So anyway, that would be kind of where I'm coming from. But let's jump over, since we've talked about your 2-year silver collar when you've been on the show before. So let's jump over to silver a little bit. And I haven't really looked at that this week, but you want to lead the charge in terms of talking about the collar, how it's performing, what you think, would you put it on again, that kind of stuff.
Well, yeah, and to answer your question, first off, would I put on again? Absolutely. With that, silver has been, over the course of the last year or so, kind of an exciting road to nowhere. It's down a little bit right now. It was up a bunch, but now it's down. But it's really just in looking at it and looking at the contract for silver, it's really not had a ton of movement thus far this year. I shouldn't say not a ton of movement, but it's really not had quite the same movement that I had hoped it would have. Longo always makes fun of me in that we both thought that being active on a collar with silver would be quite the thing to do this year in terms of having content for the option block, but it's quite honestly been the letdown of the year for option block show content. I figured I'd be doing an adjustment on this thing every week, but I think I've done like 2 or 3 adjustments thus far. I'm hedged at the 12 level on silver right now. But what I have done a couple times is I've gotten into and out of the covered call on it. And right now, recently, with silver coming down like it has, kind of just opened, I hate to say open to the floodgates, but probably about 2 weeks ago, it's started to really come down fairly significantly. I'm hedged at the 12 level, so it's not one to where it's anywhere near of anything I'm concerned with at this point or need to do anything with on the put side of it at this point. The tighter collar that I have had on, I'm still hedged at the 17 level. Now, what I'm looking to do at this point in time for the collar where I'm hedged at the 17 level, I'm looking to get to the point to where do we have enough extrinsic value bled out of the 17 puts to where I need to roll it down and do something to where I can roll it down to a lower put strike. Underlying rallies a little bit, and then you end up being profitable even when the underlying is down. That worked out recently, but at some point I'd like silver to come up instead of being ahead a couple pennies when it goes down 10 to 15% on the year. I'd much rather be up a decent amount if it were to actually go higher. But with that being said, I think that what I'm kind of waiting on at this point in time, I want to see silver get a little bit more of a rally, and then I want to resell the covered call side of this trade. What the rally would be, I'd want to see at least another $1 at least before I would start even looking. But the concept behind it is that because silver typically has a reverse skew in it as compared to the S&P, volatility is higher on the call side of it, typically, not always. I'm sure you'll kind of address that as to what's going on with that now in a second. But the concept behind it is that if we get a rally, if we get more vol on the call side on silver, then that gives me the opportunity to sell a covered call on the position and allow for it to take advantage of that reverse skew. That's kind of one of the areas with which I'm working on that collar at this point in time. But for now, it's just it's a married put position waiting for a rally to sell the covered call again. If we do come down a little bit further, then at least on the one where I'm hedged at 17, I want to look to roll that in some way, shape, or form, but not quite there yet.
Okay, so you brought up 2 things, that one of which I'm familiar with, the covered calls, and I think I've become more an advocate. Being from the rate, in the Eurodollar, as I talk about, that's where I learned to trade in the Eurodollar option pit. You didn't talk too much about covered calls per se, but you talked about covered calls in the equity market. And now I like, the more I learn and the more I'm just more well-rounded in terms of what I'm paying attention to, I kind of like the covered call. So you call the married put. So does that married put mean you put that you've got hedged is what you mean by that? Is that correct?
Yeah, long the underlying and then bought the put as a hedge.
Okay, so you know my game then too, because I like that trade as well. So I've never heard that term before, so I'm gonna have to remember that term. But I looking at the historical chart here, just looking at the 5-year, 30-day constant maturity, we're as low as we've been from a volatility standpoint here in a while. And as we've hit these lows in the past, we've seen significant changes in the volatility on the upside. So we trend much longer. It looks like just from obviously history is all we have to look at, that we might get a push up here in volatility, and a lot of those moves up in vol have come on breaks in the contract. But maybe this time, can you see it going? I mean, how low do you think silver can go? I mean, what's the lowest you've seen it go? Have we seen that in the last couple of years, the lowest it's been? I mean, in recent history.
Yeah, so far this year, we're close to the lows of the year. We were a little bit lower in July. But in terms of just in looking back to historical silver, let me bring this up. Give me 1 second. I'm looking at the chart. But in terms of looking at historically how we are in terms of the lows of silver, we were actually roughly half of this, but that was in 2009. And then immediately afterwards, silver went up to the upper 40s. So that was the case. In recent history, if we want to go back to about 2 years ago, we were in probably about $2 lower. And right. Before that, we would have had to have gone back, the 2009 rally, and when it started in 2009 was the other low of it. So we're at relatively low levels right now for silver, historically speaking. Now, it doesn't mean it couldn't go lower. It definitely could, but we definitely are on the lower end of the spectrum. No one would doubt that.
Right. So we would, if we were analysts looking at the stock market, would you say we're in an accumulation phase here for silver from a physical standpoint? I mean, really, it's if we're plus or minus where we are, it's probably a good place to be long that underlying. Would that be a fair statement?
For me, yes, but I'm a silver bull, so the way that I typically, I guess, it would definitely be a fair statement for me. But I've always been a silver bull. I think just over the long term, there's a lot of reasons why I think it will go higher, and I think that it's a good long-term holding to have in some way, shape, or form. But on the flip side, silver is not something that sits still. You need to have some type of a hedge on it at all times as well, I think.
Right. I mean, I think over the last couple 3 years, I've become much more of a physical bull, just in terms of just as a divestment from the your standard sort of what we think of as investments, and whether it be the stock market or whatever the case may be. So yeah, these levels I feel like, at least from a personal standpoint, are good accumulation levels, and again, if you go lower, you just look at you kind of dollar cost average if that's the case. But there's only so low I would imagine that it can go. So. But we're going to keep. I learned something today. I learned the married put. Okay, so and the cover call. So you're doing. So when you do so just to kind of wrap this up on the collar. So when you do this collar, you're treating both ends of it from a hedge standpoint. At least that's what I gather from your explanation.
Yeah, I'm trying to, for the term that Andrew Giovinazzi uses, do stuff. In that, if it goes down lower as it has, that's an opportunity to buy to cover the short covered call or the short call, and then possibly roll the put out. I'm not at that stage yet, but changed from being a collar position to just a married put position, to where being long the underlying, long the put, and then as it goes higher, then possibly sell the covered call again and go to the well twice if possible.
All right. Well, I like that. This is sort of a dynamic collar. So this will be, and this is, it's funny. I don't know if you realize this. Part of the reason to put QuikSkew together was to sort of give the relationship between the 25 delta, obviously the 25 delta call, the 25 delta put is the one we focus on, since that's sort of the one everybody talks about. But the whole idea of the QuikSkew is so you could see how the collar's sort of breathing. If it's got a deep breath, it means it's very wide. There's a big disparity between the call and the put. And if it's narrow, it's contracting, and maybe it's not so interesting. So, that was just, it seems like a nice thing to sort of marry together. And I call it the QuikSkew trade, which is it's doing the collar, but how I think of it is hedging it with the at the money. Okay, so you're basically doing a put spread and a call spread. So you're selling the expensive out of the money, buying the cheap out of the money, and then hedging it with a synthetic. And the reason I like that is you can sort of do it without having to do the underlying, and now you just have put spread and call spread. So anyway, that's the thought. That's the thought behind QuikSkew. So let's see, we're approaching, we got about 15, 20 minutes left, but let's, the elephant in the room. What's the elephant in the room today? What did we?
Let me see. Some coin exchange thing. Bitcoin. Oh yeah, that.
Right. So we got the elephant in the room is the Bitcoin. That's all. And I tell you, this is when I know it's gone. Well, again, going too far. Who knows? I think everybody would love to see it come down. I think everybody but the people that are long it. And I think the people that want it to come down are people that didn't get in it early, right? And I go back and tell, Mark and I talk about it. I've been doing a little dabbling, but very, very small. Mostly, it's one of those things that if you don't do something, you don't pay attention to it, right? So I had to do some stuff so I could pay attention to it. So it forces you sort of look at prices and look at trends and look at the other cryptos that are out there, so you can get familiar with the reason behind the different cryptos. And like one is used for banking, like Ripple, and then there's one for Ethereum, which is like for computing time, and then there's Litecoin, which is transactional, right? And then there's Bitcoin, which it's getting to the point where it's so expensive to complete the transaction. It's not necessarily a good, high frequency transaction thing. Now it's become more of a store of value. So, I got involved, and just so you can start paying attention to it. But when I start seeing, live in the suburbs, and when I start seeing emails from the financial planners in our town talking about how to get involved in Bitcoin, it scares. That's when I get scared, right? Is when you start to and I think that's I don't know what you think about this, but everybody's sort of gotten, and maybe this is the whole market numbing, news numbing thing, right? If you told somebody 2 years ago, hey, I can get you a 10% return annually for the next 10 years, what do you think they'd say, right? They'd be, I'm ecstatic, right? Because if you tell me that's going to happen. But now if people aren't seeing something doubling or tripling, they think it's a bad investment. So I think that's kind of, at least in my opinion, from just trying to approach it from a practical standpoint, is, people are looking at the returns that some of the cryptos are getting, and they're just thinking that they're missing. Well, some are missing the boat, but it's not, it can't be sustained, right? It's just not something that you can't have a parabolic price forever.
No, I would agree on that. And, the fact that I've fielded at least 6,000 phone calls in the last couple of weeks on Bitcoin from clients and people alone. I'm exaggerating, but good gosh, it sure feels like it. And just the fact that everyone's talking about it tells me that who knows, it could go up to 100,000. You never know. But I think I don't think it's going to end well. When it ends, that I don't know. But when it does end, I don't think it's going to end well, and for a few reasons. The first reason is that at some point in time, the people that control regular currencies if they want to, they can put the kibosh on this in one way, shape, or form. So let's say that the U.S. government decides that they don't like this Bitcoin thing. They can either by using legal ramifications or simply by the fact that they have lots of money. If they want to manipulate the Bitcoin market, they can. And they can make this thing go tumbling down at any point in time should they choose to. The other reason for my thoughts on Bitcoin looking to come down at some point is that how do you ever have a Bitcoin split? Can you trade things in? So like if a stock were to go up this high, they'd likely have a split of some sort. But I don't know if it's even possible to have a currency split of some sort. I wouldn't even know how that would work. So that's another concern. And then the final one is just, like I said, everybody, I have some clients who are very sophisticated, some who are not very sophisticated. And I love all my clients. And I'm not just saying that. I've been very blessed with the best clients ever. But everybody's talking about it right now. People that stare at the charts, looking at 3-minute charts and call me if they don't get every tick, and people that don't even look at a statement but maybe once a year are calling me on it. And whenever you have people like that talking about a certain underlying, I can't think of any time in history that it's ever ended well. So with that being said, we were talking about yesterday on the option block. I think the way that I'd actually want to play it is once we actually are able to trade options on it, I would love to buy a vertical put spread on it. I wouldn't want to short it because I think you'd be a fool to short it, just go outright short on it right now, just with everything that's been going on. But if you have limited risk and you're buying a put spread, and I'm willing to bet it'll be a put spread because at some point options are going to come out on these. And if you just buy a straight long put on that, I would imagine the vol would be about somewhere near 6 trillion, I think. Who knows? So it'd likely be pretty expensive vol. But if you buy a put spread on it to kind of hedge off the vol a little bit, you can have a bearish position on it. And quite frankly, I can't wait to play in that, not necessarily with client money, but at least with my own, in terms of buying a put spread on Bitcoin at some point, if we ever do get options on it, which we will in the near future, I believe.
Yeah, I think, we saw the SIBO did their XBT contract, so they're trading the Jan, Feb, and March. That started on Sunday, and I think everybody who was involved in the market or is involved in the market was sitting at their computer, whether it be at their office or I was sitting at the counter in my kitchen watching and seeing and sort of lamenting that the SIBOs couldn't get to the SIBO price page for a while until they kind of beefed up some of the servers over there. But, generally speaking, a pretty good launch for that. If people aren't aware, or if you haven't been reading about it, that's a single coin contract. They're trading 3 contracts, right? The Jan, Feb, and March. There was a fair amount of good volume. I think the best volume day was Sunday night, Monday. They don't have good historical charts on this thing. I've been trying to talk to them about using QuikStrike, but that's another story. But I think that's the first day was our best day from a volume standpoint there. Again, today we're looking up, I think it dampened the price movement quite a bit. Although the last couple of days we've been up today we're up about 1,250 in the future. So I think it stopped that really skyrocketing up price, and I think that was the whole intent of anybody who wanted that to be in the market. Now, coming up Sunday night, we're going to see the CME's BTC is going to be the symbol. That contract is going to have this week. It's going to have a Jan, Feb, March, and a June, right? So it's going to have 2 serials and 2 quarterlies. But the thing I like about the CME's contract is they're also going to trade the spreads. And I think personally, you talked about options. Now, I believe I've been saying all along, a couple things I've been saying all along, and I've been trying to put them out there. Not that just because I don't want to ever be the guy to go back and say, well, I said that, but I've been putting it out there and I put it on social media and I've been saying it in shows. At first, I was curious as to why the CME chose 5 coins. But then, it's more because I think it's going to be more of an institutional contract where they need, so there's a bigger contract to manage bigger risk. And then the thing that kind of struck me was it makes sense to start with the big one, like the S&P is 5 times as big as the mini. So the next thing you're going to see, I think, is the BTC is going to be a BTC mini coming out of the CME, and that makes total sense. So you go from 5 coins down to 1 coin. And I don't have any inside information, but I've been peppering everybody I can over there saying, is this going to happen? Is this going to happen? And I don't get any answers. But that's my guess. I think we're going to get the big contract like you have, and then you're going to see the mini contract. So they're going to get the institutional with the big one, and they're going to get the retail with the little one, the 1 coin. And I still think, I don't know much about the SIBO, but it just seems like CME's got the edge when it comes to the futures. As far as options go, again, not knowing anything, but just sort of pure conjecture, those are obviously going to come very soon. I can't imagine. I think that's a little bit, once you get the future and to see what the volume is, it's typical of an exchange release to do the underlying first and then to follow it up with the options contract. So you see if it's worthwhile from a volume standpoint, and then you immediately follow it up with the options. So those are going to come. But Mike, the thing I like, And the thing that I think is going to be awesome is the spread. So, this spread I think is going to be very much where you get a rally, the back month is going to push up higher than the front. You get a break, it's going to go the other way, right? It's going to be sort of like the sky is falling. The Chicken Little thing is like, okay, this spread's going to widen up because we're going to keep going because it's bullish, or if you see a big tank or you see a big spike down, you go, okay, now the end is near, so now the spread's going to widen. So I believe that there's CSOs, calendar spread options on a lot of these commodities. I think, at least I would think, that's going to be an attractive trade as well. So we're going to see those options. I think the big question is whether if we're going to see calendar spread options on the Bitcoin future spreads, because I think that's the one place where SIBO missed the boat, and I think the CME. Now, we didn't see a lot of trade in the deferred contracts in the SIBO. It was very little, but part of that is, I think, is because it's you're doing two different legs. You can't do when you can do the spread together. Obviously, you get a much tighter market. Markets are pretty wide on the outrights, so that's kind of my prediction there. What do you think? I mean, do you like the idea of the calendar spread options? Do you think it's viable? And what do you think about the whole mini contract following up the 5-coin contract?
Well, I definitely think it'd be viable and a very doable thing. And I would agree if history would repeat itself in terms of how, like, you have the S&P, you have the big contract, and then you have the E-mini with the smaller contract. Definitely a very possible thing. And the other reason I think that the mini contract has been so popular in the S&P is the fact that there's still the day trader rules that exist with on the stock side of it. I think that's one area to where the SEC really helped the futures world just by having that rule, and then the people in the futures world took advantage of that. And I think that's another reason for such popularity on it, because it's definitely a lot easier to day trade. I don't think anyone would argue with that. So I would like to see that if we were to have a big contract and a mini contract for the spreads on them. I think that would be great if that could work, as that works out. And I think this is going to be a lot of fun to watch. I'm just kind of looking at a 2-day chart of Bitcoin on the SIBO, and over the course of the last couple of days, I'm showing it as low as 16,500, and then as high as 18,600. So if that doesn't get your heart going, then quite frankly, you have to check your pulse.
Yeah, for sure. I mean, that's a thing. It's like we've just grown, and I think it goes back to your initial comments. We've grown used to seeing these ridiculous percent moves in this contract that people are just sort of, they're drawn to it, right? Because we just haven't seen it before. So like we said, keep in mind, now the SIBO is going to have a little bit. I think the CME almost benefited from having the SIBO go first. At first, I thought it was, maybe would they miss the boat on this? But I think it almost benefited because they got to see that there were some problems with the site and those kind of things. So I think that those things are going to get beefed up for Sunday night. So you'll, just to kind of elaborate on what's going to happen on the CME, they're kind of this is something that people are going to have to wrap their heads around as well. They're kind of touting it as the Bitcoin real-time index, which is the BRTI, and then they talk about the BRR, which is the Bitcoin reference rate. In the end, they're really one and the same, right? Because the BRR gets set off the real-time index, but they're initially treating it as two reported items. So what you'll see is we just released some quick strike tools on the CME website for Bitcoin. And if you go to cmegroup.com/quickstrike and then go into the single asset class section, you'll see that we have, there's a Bitcoin pricing tool down below, and you'll have the ability to go to see the intraday and the short-term minute charts for the BRTI, the real-time index. And then you'll also be able to go to the BRR tab to see the set, which is more or less, it's a reference rate. You can think of it for all intents and purposes as a settlement as well. So those charts are out there, and you can look at them they're out there now. You will get a better version of them that's going to be released this weekend as well. But that's going to, not only on the homepage, you're going to be able to see those prices, but you'll be able to see the charting and go back in time. I think there's 1 year worth of history in the reference rate, high or low, open, close that we have loaded out there now. So I think it goes back to 12/18 of December of last year. So you're going to have a place to look, and that's really the thing about these indexes, Mike. I think that I go on a bunch of different exchanges looking at it, and you have so many disparate prices. this index, SIBO index, is on the GDAX, right? So that's one exchange number that it's tracking. This reference rate is on 4, and I think GDAX I don't even know that. I'm not sure the names of the other ones, but GDAX is one of them. So there's 4 there, and then there's another exchange called Terra Exchange, and they have 9 in their index. So I think the more indexes that get put into these reference rates that are then tied to these futures contracts, then you're going to get more of a sort of a price discovery stability when it comes down to people, being able to be comfortable with the prices they're paying or where things are in that market in particular. So, like everybody else, I'm looking forward to it, and can't wait to see if we have any movement. What I really want, obviously, what everybody wants is just volume. You want to see trade, you want to see volume, you want to see some movement. So it'll be fun to, again, we've been saying it over and over again. It'll be fun to watch. And see what happens this weekend in particular. So Sunday, Monday, it's going to be exciting to see if there's any drop off in the volume over at the SIBO. So, all right, so we're almost at the end of the rope there. We have 5 more minutes to go. We should probably look at our at some user questions. We'll see if we have anything here. Let's see. All right, we already talked about that a little bit. We talked about Mark Clyde Bryan asked about who's listing options first. I think that's going to be. Don't know. Don't have an answer to that. I'm guessing that they've both been thinking about it. CME came out of the blue. One of the leadership said we're not going to do Bitcoin right away, and then the next thing you know, there was an announcement that they were going to do it. So I'm going to guess that CME is going to have them on the heels pretty quickly. But there's nothing in the security definition files or anything like that that's showing options have been defined or available. That's one place you could always look and see, and you could also always get access to that product file over on the CME Group website. If you go to QuikStrike Tools again, there's a product browser. You could type in a symbol, and you can always see what stuff is either trading or what's going to be trading within the next 2 weeks. So that's one way to get an idea. And let's see, what do we have here? We got a question from Knack, who'd like to show with the QuikSkew updates, what's the best way for me to take advantage of that information? Should I be trading risk reversals? Mike, you talked about it. When I mentioned to you, gave you a little bit better definition of what QuikSkew is. So, right, if you have some way of relating between the call and a put, QuikSkew would probably be a decent way to take advantage or to put on a risk reversal or those put spreads or whatever. What do you say about that?
Oh, I think that would be a great tool to look for it, to look for the skew, to see exactly where you want it, what contract you want, what month you want, what strikes you want. I think that is a plan. Yeah,
so go out there. You could take a look. Embedded in QuikStrike Essentials, which is the free version of QuikStrike on the CME website, is a tool called QuickVol. There you're able to get historical data for 1 month. Included in that is 1 month of QuikSkew. So go out there and take a look. If you need more than that, you can give us a call, and we have history back through the beginning of 2011 and soon to the beginning of 2007. So we're looking forward to hearing if you have any questions about that. And then finally, we got 2 minutes left. Question from B98. I know straddle runs are a big thing in indexes. Don't hear them used in ags or metals, though. Why is that? Well, I see I'm on a couple broker emails for the ags, and I see straddle runs get pushed out. I think what happens is in the Eurodollars and in the treasuries, when I was back in the pit, you saw straddle runs all the time because it was a way for people to sort of set their term structure for the contracts that were trading. I'm not so sure how much they did it in equities. Mike, you could talk to that if you got any insight. But from the any market that I've ever seen and any brokers that I ever talked to, they're always doing straddle runs. And straddle runs are a way, when you talk about volatility in a contract, everybody knows you have a volatility curve, but when we're talking about levels, the levels they're discussing is always around the at the money. Therefore, that's why you would use the straddle run. So it's giving you sort of the most active, most liquid contracts level of trading from a volatility standpoint. So they're metals, I don't know much about that market, but I cannot believe that when it was very active, there weren't people calling down to give me a run. And it also could be in the indexes because, it used to be that there weren't that many contracts that traded in the Eurodollars. You had a bunch of them that were trading, and then they were liquid. So people had to get the run so they could see where vols were because you couldn't watch all of them. So, Mike, what do you think? The equities, did they do that? Did they do straddle runs in there too, or is not so popular there? I'm not so sure about that.
Hard to say. I mean, it's not part of my everyday world, but with that, it's definitely something to be aware of. That's for sure.
Okay. All right. Well, Mike, thanks a lot for filling in. I appreciate you taking the hot seat. So, my seat's been hot the whole time because I've been bouncing around hoping I can do justice to Longo, but we hope he feels better. And again, if you, Mike, what do you got to say to close up the books?
Hey, appreciate it. Thanks for letting me come onto the show today. It's always fun to be on TWIFO, but if anyone ever is interested in a financial advisor who's not afraid of the word TWIFO, give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
All right. Well, thanks again, Mike. Everybody, again, go pay attention out to cmegroup.com/quickstrike or bantix.com, BANTIX.com to look at all the tools that we offer. But have a good weekend watching Bitcoin futures get released at the CME, and we'll talk to you next week.
This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.